Good day, everyone. How we doing? Welcome once again to Panorama Forex Academy, where we build kings and independent traders on how to milk the financial market right from the beginning stage, regardless of what stage you are as an individual. Just pay attention to the lectures and be engaging, and you'll see yourself start building and start growing in the knowledge of this financial market. All right, so. Yeah, let's go straight to the business of today. Today we're going to be talking about types of order blocks and properties of a valid order block. Then we'll go to our chart and do some drawing. See, now this is more of like the holy grail here now. There's no holy grail in trailing, but this is something that if you should know, my goodness, if you should know very, very well, you already have yourself one jackpot to being a very profitable trader. All right, so what I'm about to give you now is worth thousands of dollars, believe me, if you actually know how to apply it very well. So now we've been talking about key levels. I haven't talked about introduction to order blocks in my last video. You understand? In the last video I talked about introduction to order blocks, just telling you what basically order blocks are. But in this video I'll be telling you the two types of order block there is, and I'll be telling you the properties of a valid order block. There are thousands of order blocks in the market, but you just have to pay attention to one particular type of order block, and that's the one you are going to maximize upon. All right? Yeah, so anywhere you see that one, just know that you are seeing money. Yeah, so let's go straight to the business of today. Now, this is my drawing board. Get your pen and your papers ready. Get your pen and your book ready. We're about to go on a journey right now. So we have two major types of order blocks. We have the bullish order block and the bearish order block, or the bearish order block and the bullish order block, whatever you want to call them. The first order block, we have the bearish order block. They are not in any kind of order, but you understand. And the second one is the bullish order block. Now let's talk about the bearish order block. Now this is the example. I just drew this one myself, all right? So this is an example of a bearish order block. You only see a bearish order block. Write all these things I'm saying. These are key points that I might not say it again because it's coming in my head the way I want you to learn it. You understand? So a bearish order block only appears in a bearish market. So you want to see a market in a bearish trend in order to mark out a bearish order block. All right? That's one point. Yeah. While in a bullish market, a bullish order block only appears in a bullish market. You want to be marking a key level. That means another block is a key level, all right? It's a point of interest. You want to be marking your order block in a bullish market, your bullish order block in a bullish market, all right? You want to see the market giving you higher highs and higher lows in order to mark a bullish order block. That's one point again. Another point is this. In a bearish market, when you mark your bearish order block, you are looking to sell. Immediately price gets into your bearish order block. All right? Immediately price gets into your bearish order block, you're looking to sell. Okay? Let me do a little drawing here so it will be more graphical and more, yeah, it will be more understanding this way. So let's do a little drawing, right? Yep, I like drawing here. So now, okay, sorry about that. All right. Now, this is how you draw your order block. You understand? You remember I said again, the definition of an order block is, not the definition, you understand. What an order block is actually is the last, in a bearish order block, which is this bearish order block, it is the last bullish candle before the bearish expansion to the downside. That particular candle there, that is another block. So the entirety of that candle, that is what you are going to draw as your order block. The entirety of the whole candle. You are going to draw it and extend that rectangular to the future. You understand? Like to the front. Or because price continue printing candles forward. Yeah? Please, if you're not understanding, once the WhatsApp group is open for questions, ask questions. Please don't act like you understand. There's no assumption in this market. Assumption is very, very costly in this market. What you don't understand until it is proven otherwise that you know it. You understand? Yeah. Why in a bullish market, Why in a bullish order block? I said that it is the last bearish candle before the bullish expansion to the upside. That is what you're going to mark as your order block. You understand? So the entirety of that candle like that, you mark the entirety of that candle, you understand, with your rectangular tool and extend it way to the future. You understand? Let me make it more, let me even make it more graphical self. Let me add, because this is exactly the kind of color I use for my order block. So let me make it more graphical. All right. So like I play a lot. I don't play a lot. Actually, this is me doing me. So back to business. Hold on a little bit, and yeah, I want to bring my pencil out. Now, in a bearish order block, you're looking to sell. You understand? Once you've marked out, you've seen that, okay, price has printed another block for you, and you've spotted the other block, and you've marked the other block. What you're waiting for is for price to, form rally. Price doesn't go straight, do its thing, rally, and goes back into the other block. And once price gets back into the other block, I'll teach you guys how to get confirmation. You understand? This is how to get key levels. Once price gets into the other block, you sell. I'm coming. Hold on. Let me make this exactly. Hold on. Once price, does its thing, and gets into the other block. Once price enters into the other block, what you want to see that price inside the other block. When I mean price, that line that is always moving, that is forming candles. You understand? Once it gets into the other block, you sell. In the bearish order block, you sell. And when you sell, you see your position open. You understand? Then you see price respecting your order block starts coming down. You understand? And once you sell, you put your stop loss above, a little bit above the other block, not in the line of the other block. You understand? Because of what we call spread or slippage. You understand? Yeah. And while in a bullish order block, once the order block has, once the market has given you your bullish order block, you've spotted it already, you wait for, this is where patience plays a very good role. This is where patience becomes a virtue as a trader. You wait for price to come back inside your order block, you understand? Then you buy, and you see price respecting your order block, you understand? Then you put your stop loss slightly below the order block, all right? Then your take profits, whatever amounts you want to put your take profits, just make sure it's not outrageous, you understand? In case of price be in your favor and you don't take the money on the table and price reverses back and clear out all your orders. You understand? Make sure you take profits when you already have a good amount of money. Yeah. All right. So now that you've understand the type of order block we have, let's talk about the properties of a valid order block. All right. What are the properties of a valid order block? What should an order block have that will make you consider this order block valid? Number one, it must have an imbalance. What do I tell you guys about an imbalance? An imbalance is once you count 3 candles, like 1, 2, 3. If it has space that the wick of this candle, when I mean the wick, the tinier part of a candlestick, the wick of the candle is not interlocking like this. Like there is actually really space in between the first candle and the third candle. That space there, that space in the middle there is what I actually really call a wick, all right? That space in the middle there is what I call a wick. Like, then you draw that space from here to here is what I call an imbalance, you understand? Now, when I say the order block should have an imbalance, it means that there should be some kind of imbalance before the order block, you understand? There should be a space before the order block. I'll go to my chart now to give an example. Same thing goes here. There should be a space before, see the space here, you understand? There is no wick here. Assuming there was a wick that actually really closed up this space like this, you understand? There is no imbalance here, you understand? So this order block will not be considered a valid order block. Yeah, so like this, it is a very valid order block. These are 3 properties I'm giving you of a valid order block. There are 5 or 6 of them. I'm giving you only 3. You understand? This 3 alone is enough. All right, so That's the imbalance. Number two, it must be unmitigated. What do I mean by unmitigated? Once you see, for instance, that price has rallied, and has tapped into the order block. Once price has entered into the order block and has rejected off it and you've taken your trade, this order block is no longer valid again. It has been used up. You understand? So what do I mean by that? If price is coming back to it again, there is a high probability that it would not hold. You understand? And price will break through it to the downside. All right, I'll go to my chart now, and the last one is that it must be engulfed. What do I mean by it must be? Not the last one, the third one I'm going to give you guys for now is that it must be engulfed. What do I mean by it must be engulfed? Once you mark out your order block from that candlestick, you understand, the next candle, hold on. The next candle after the candle that you marked your order block from should be longer than it should be longer than your order block candle. All right. See here, this candle here should be longer than your order block candle. All right. So let me give an example for what I just did. All right. Okay, let's give an example. Now we are going to use these three checklists now for our order block. Number one, it must. What's number one again, for those that are actually really following? Yeah, it must have an imbalance. The number two, yeah, it must be unmitigated. And number three, yeah, it must be engulfed. The candle after it must be longer than it. So now, remember this is a bullish trend now. We can see that this is a bullish trend. Now, this is the last bearish candle before this bullish expansion. But does it fulfill all the criteria of an order block? The number one, it should have an imbalance. See, there was no imbalance here at all. There was no imbalance. Can you see it? There was no imbalance, because what do I mean by that? If you draw your order block in this entire candle here like this, there was no imbalance above it. You understand? The second candle should give you an imbalance, not this one here. Fine, there was an imbalance here, but once the imbalance should be in the second candle. All right, so this was not a valid order block. You see, I just saved you from this now. Yeah, so this again was the last bearish candle before a bullish expansion to the upside. Let's check if it's a valid order block. Number one, it must have an imbalance. Yeah, it had an imbalance. Number two, it must not be mitigated. Yeah, price has not come to fill it up. And number three, it must be engulfed. See something? The next candle after this order block, was longer than it, and it covered it in its entirety. So that's a very valid order block. So we mark that order block there, and we extend it to the future and see what happened. Immediately, price came back into it. See, if you buy here and put your stop loss slightly below the order block, and see, these people have been yours. This was a very sweet trade. All right, so let's look for more examples. All right, let's move and look for more examples. All right. So now you need to understand something, that meaning another block is valid does not mean that, price is not going to violate it. You understand? There are sometimes price does its thing. You understand? Price just tends to do its thing. You understand? Yeah. Okay, now my eye is already tuned to it already. Anytime I see this order block, I know. You understand? Now, this is a valid order block here. This is for a bearish order block. This was the last bullish candle before a bearish expansion to the downside. Why? It had an imbalance. You understand? This imbalance was not filled yet, and it was not mitigated, and this candle after it was longer than it. You understand? So I just bring out my tool like that, and I mark the other block. You understand? I just mark the other block. You see something? See, immediately price came back inside of it. Price just rejected. And so if you're taking a sell trade here, you understand, you see price will have gone in your favor. And you should be targeting the next high. You understand? You should be targeting the next high. In this kind of trade now, you should be looking to take your profit or get out of the trade once price has reached this high here. You understand? So yeah, and see what happened. Once price mitigated it, once price was coming up again, see what happened. Let's say we extended this guy way, way, way to the future. You understand? Once price was coming back into it, serious price was, slash trade like it was never there, because why? Price has mitigated it already before. You understand? See, you can tend to see them. Look at this candle here, this last bearish expansion, and most of the time in a bullish trend, write this one down. Most of the time in a bullish trend, the order block is always at the higher low, not the higher high. Always at the higher low, not the higher high. You understand? And in a bearish trend, the order block is always at the lower low. In a bearish trend, the order block is always at the lower high, not the lower, at the lower low, lower high, not the lower low. I'll say that again. Your order block are always at your higher low in a bullish trend, not the higher high, and are always at the lower high in a bearish trend, not the lower low. You understand? See an example again. You understand? See it here. It was not mitigated, it had an imbalance, and it was engulfed. You understand? It tends to, with time, after back testing, you tend to see this almost everywhere in your chart and see something. Yeah, see the way price just respected it. Are you seeing how easy it is now to spot out order block? This was also an order block, also a bearish order block. You understand? That was a bearish order block. But the price come to fill it up. Price didn't come and fill it up. What a pity, you understand? Price only just came beside it and went down. It's okay. Sometimes we miss trades. You understand? Sometimes we even lose trades. You understand? But with a good risk management, you make sure your account is not wiped out. You understand? But make sure you have more winning trade than losing trades. You understand what I'm talking about? Yeah, that's what makes you a very profitable trader. Yeah, that is what makes you a very profitable trader. This was also another block here. You understand? So it's another block here. It has an imbalance. It was not mitigated, and it was engulfed by the other candle. I'm just giving examples. Now, in the next video, I will settle down to give more clearer examples, you understand, and see something. Immediately price came back into it. It was all a sell from there. A very lovely trade, you understand, a very, very lovely, lovely, lovely trade. And you can see it, they are always everywhere, you understand. If you pay good attention to them, they are everywhere, all right? So this is where I'm going to end this video for now. Please, if you want to understand all the concepts I've been talking about, go back to backtest in your chart. Just because you're already seeing one or two things that are working based on what you've been learning, you feel like you already know about the financial market. No, you don't know about the financial market. You need to backtest for a long period of time and build yourself a strategy. That's what makes you a good trader, and that's what makes you know about the market. You understand? So at this time, the best advice I'm going to give to you is to keep on backtesting and studying. You understand? Don't leave your job and say you already know about Forex. You don't know about Forex. It takes time to build stamina and to build stature in this game. You understand? So keep on backtesting. Make sure you are becoming very good at all these concepts. And at the end of everything, we are going to build a strategy together and stick to that strategy, refine the strategy till it becomes your edge in trading. So cheers and God bless. Have a blessed and wonderful day.